Okay, back to business here, guys. Bitcoin actually looks like it's breaking out here, breaking this downtrend here. Looks starting to get above this cloud. This actually looks pretty positive for Bitcoin here. But let's get back to what we were talking about over here. The market is going to make impulses down. All right. Usually when we get impulses up, they are, we can measure them out. Same thing. When the impulse is down, we start to get Elliott waves on the way down. And when we start shorting all these markets after the market cycle's over, we're going to play the same strategy, but upside down in a sense. Basically reverse Elliott waves. So when this move happened over here, I had already seen this as an Elliott forming here. Okay. But like I said, a lot of people that don't trade Elliott waves, they just looked at this as a 3 drives down pattern, basically. About here. Okay. 3 drives down. Now, 3 drives down is a bullish reversal pattern, but it's really just an Elliott wave. Okay, it's an impulse down where you have the market make nice moves down, and then after the that 5th impulse leg down, it does a reversal. Okay, and we basically got a reverse Elliott wave right here, like this, and then bang. Now this one, mind you, with the whole SEC thing that day, just went crazy. But we would usually be looking for something like this to wind up about here, about number 2 or so. But we would be able, like this, we'll get into this on our next couple sessions where we start talking about how this relates to Fibonacci. We basically would be looking for that wave to come in right around this 78.6 line, right around here. So, okay, it's the same thing like when we see a move that we want to get into when the price is going up, we look for the retracement to get in. Same thing when the price is going down, you don't want to sell it when it's going down. You want to sell it when it comes back up to these retracement points, these 2 point, the 4 point. The same way when we're trading Elliott waves on the way up, we want to buy number 2. We want to buy number 4. All right, on the way down, we want to sell number 2. We want to sell number 4. It's the same thing, except it's just upside down. So here, if you didn't get into the sell here, on the way back up, you sell here. If you didn't get into that one on the way back up, you sell here. But you understand that the market's usually going to make these 5 impulsive waves down, and then a reversal that's going to be some sort of a B, C type of reversal. Now, this is because Bitcoin reached the top of what it could possibly do here at the moment. Like, I still am very bullish on Bitcoin, but Bitcoin needs to get optimism in the market before the belief, the thrill, and euphoria can come. All right. So right now, Bitcoin's making the kind of move that it needs to make on a bigger picture to get that optimism. Okay. Basically, the kind of thing that would create optimism in the market is if it dumps under 1,000 like 2-3 times and then pops its head back up and says, no, we're still going to go. Okay. That's optimism. Okay. That's kind of like what we're establishing in the market right now. Where's the price at? Where'd it go? All right, it's not there. Trading view is good, guys, but it's not always the best. All right. I prefer it rather than CoinView though, because I don't really trade anywhere but Poloniex, and I do trade foreign exchange, so they have trading view for foreign exchange, stocks, everything. So let's go to stochastic. Here in this market cycle here for Bitcoin, okay, we already had this bubble, but for us to continue and make a new bubble here, okay, and get that real push like gold did. I mean, we can look at the gold chart again, how it came out of one bubble and went to another, and it just basically it starts to run up and hit all these Fibonacci extensions in price. Okay, it's the same thing. This is the same strategy that we can play on a monthly chart, a weekly chart, a 5-minute chart. It's all the same, guys. You basically, you look for that impulsive emotional move and you measure it with a Fibonacci extension, and it shows you, where that could continue to go from that initial impulse. Now, you can do that on a weekly chart, 3-day chart, monthly, or even 5 minute. Really, you're measuring that first impulsive emotional move, and it kind of lays out the growth that could come according to these Fibonacci numbers. And we're going to get deep into Fibonacci numbers in a couple of days here. But this right here, for this to happen, and for us to go out of one bubble and create another, we have to get that optimism, belief, thrill, and euphoria. All right. And right now, Bitcoin, it basically is creeping up there where it beat the all-time high. And now for this thing to continue on, it has to basically bounce back from 1,000 here, climb back up, and get that optimism again. Okay. Once we get that optimism, then we get a little bit higher. And everybody starts to believe, then it'll be on the news again. They'll be talking about how Bitcoin's the best investment of the year, best performing currency, all that. And then bring the herd and the flock of people that will come and chase the price up the ladder more. And then by the time we get up here, we're experiencing, the thrill and euphoria. Okay. But we need to get that optimism in the market first. And that's what Bitcoin's doing right now. It had to sell down sharply. And actually, like most of you guys are on my signals list. The video I sent the other day, I was explaining to you guys, like, it has to fill this void here. All right, it has to fill this void and then kind of turn around and get that optimistic feeling in the market again. And that seems like what we're trying to do here now. We're trying to basically, come out of this and continue our wave cycle, continue our psychology in the market here. But it has to get knocked down until it keeps popping up. And then people become optimistic about Bitcoin. And they believe, oh, wow, this can continue to go on. So that's pretty much what the market is establishing that it's doing right now with Bitcoin. So we're seeing this, in a larger time frame here. And we're also seeing the moves manifest themselves in smaller time frames. All right. Now, once this thing clears this cloud here, and it seems like we just broke this resistive line here that we tagged 3 times. We fell off here, we hit it here, we couldn't even get to it there because of that cloud. We tagged it there, fell off, but then we broke it. So what will most likely happen now if Bitcoin is going to continue, we'll get a nice impulsive move out of here and then some sort of a consolidation. And that's when we'll be looking to buy that consolidation, because from there, it'll most likely impulse up in some sort of a measurable fashion, whether it's like this. And where these waves hit, most usually will have to do with previous price points. Okay, like maybe and say this one might even go to here, this one fall back down to about here. It's all relative. Okay, these previous price points, this first run might run up to this shelf right here, and then sell back down to this shelf, and then the next price run up maybe to right about here, to where it fell off, where it accumulated right there and fell off. And then the next one fall down, challenge the top of this wave height. And maybe, since we've got a breakout here, this line here has to become, it's resistance now, but it has to become support. So the first move it does is it tags it, wipes out all the previous price action, falls down. The next move up will clear it, and then come back down on it and say, okay, this is actually support. That's how the price is moving in ebbs and flows, okay? That's why we can understand, like, we don't want to chase it. If this thing makes a move up to here, don't chase it. Wait for it to come back down and do a retracement of that move and see how it relates to previous price points, okay? So this is the kind of thing that we're looking for here. Like, I wouldn't chase Bitcoin right now. I'll just let it do what it's going to do, Just let it do what it's going to do. I mean, I sold most of my Bitcoin at 1150, so if this thing wants to rally to, like, what, 1,000... maybe 1100, maybe it will rally to 1100, but it will most likely come back down to, like, 1050 or so, like that. And then that's when we look to get in. I mean, you could buy it now and get in early on that rush, but usually I've always found that when you chase the market, you're not rewarded. You're really not. There's very few times that you could chase the market and be rewarded, especially in a bullish market. Like, whenever I'm trading and I understand there's a bullish market, I don't chase any of these impulses. I basically will wait for this point, and if I missed it and I missed this whole wave, I'll wait for this point. Like, and you'll find some things will just, not come. Like, your entries just won't get hit and things will run away. And, for myself, I've developed a discipline where when things start to run away, I don't chase them. I don't. You know, like for instance, Decred. We played Decred, and it ran away. You know, we got out at 450 or what, something like that, and it ran away 10 times in price almost after that. But I didn't chase it. I just said, you know, we already played it. It all depends. You're going to get your own discipline in how you want to handle these moves and stuff like that. But you know, I wouldn't chase anything. Chasers aren't really rewarded in the market. So let's look here. Okay, our way down, our way up, the emotional cycle that we're experiencing. All right, let's get back over to Ethereum here. Now, Ethereum, as it goes along its way here, okay, let me get rid of the cloud here. Now let's get rid of some of these fibs. All right, from our breakout, it seems like we had a nice 1, 2, a 3, a 4, and a 5, and then this consolidation wave. You know, we did have a down, an up, and then a down, and then we broke out again. So our ABC isn't, you know, our usual like this in the Elliott wave formation, because this market's really bullish. So this turned into a pennant right here, a pennant that it could break out from. And when it broke out, what did it do? It impulsed in the normal 1, 2, 3, 4, 5. And then when it retraced in the same fashion, A, B, C. Now I'm using the C to this point right here, even though we tagged right there. But a lot of the time I use the line chart as like a true representation of open and close price. Okay, we'll talk about candles later on, but that's just my own little strategy that I do, because this price down here, yeah, sure, the price wicked down there, but really this is the representation of the price that was held during that time frame. So we got a nice impulsive leg here, you know, in here. This is like an hourly chart, but once we broke out of here, this is like just understanding the structure of the market and the way that the market unfolds. This whole move right here, okay, after we broke out of this pennant right here, and it was a pretty obvious breakout. You know, this is yes, I think I did send this is the one I sent a signal out saying that Ethereum and Monero were marching up to the breakout line. So basically, after it, you know, it marches up and then bang, it breaks out. You see a little bit more volume here, but that breakout manifests itself in an impulsive cycle. Okay, we got 1, 2, 3, 4, 5, and then we get a consolidation, a breather. Okay, but this thing is still holding trend. Okay, we got a nice impulsive leg up. We got a consolidation here. This entire move also from where it broke out to where it ran up. I mean, we could put it to here, but that's kind of like, you know, the expansion. But right about here, most of the price action, again, off of our open and close price, is basically holding this retracement here. Just 38% right through the middle here, and then a couple tags down to the 50. Now this one did tag down to the 61, but that's why, you know, I'm always waiting. When I see an impulsive move like this, I'm always waiting for it on the retracement point. So, like for instance, if you miss this entire move up, okay, if you miss the entire move up from where it broke out here to where it ran up here, you can just put a Fibonacci on it like this, and then just say, okay, during all this, I'm going to wait here. I'm going to wait here for some buys at the 61% retracement. And anybody who had buys here at the 61% line, you know, you got filled on a wick. So that's a pretty good entry right there, especially because this thing really does look like it's going to continue on all levels, on the higher time frames and on the smaller time frames here. So as the price moves out of one zone into another, it almost always follows Elliott wave structure, the wave structure. I mean, this is, lost you guys there for a second. This is the same structure that we're seeing all throughout, time and time again. So it's just really tuning into that, you know, like I said, we could play a larger move and understand that something broke out from from a larger picture. Okay. Oops. Let's look at Ethereum against Bitcoin here. Okay, look. Now this one here is falling back down to this 50% line, but we're still painting a flag right in here. Okay. If you could get right here at the 61% on the while Bitcoin's pumping and this thing drops down to there, it might be a really good entry for a bounce on a way out. But the way that price moves, you know, it creates structure. It really is a lot of structure there if you tune into it. You know, and here again, we got the 1, 2, this is against Bitcoin now, 3, 4, 5. That led to a whole pull. Okay, this is basically like, most people that don't understand Elliott wave theory, they look for something that they can relate to in the market, which would be like a bull flag. Like this is painting the normal bull flag, okay? Normal bull flag, whereas if this thing tags down here and turns around and starts to pop out of this red line, then you have all the retail traders that come in and chase it because they understand that it's a measured move. Usually the price after it breaks out will move the length of the pole. Okay, so this is where Elliott wave theory is ahead of retail traders. Like we're expecting our waves to come up and then form some sort of a consolidation. And in a really bullish market like this, those consolidations are pennants like this and flags, pennants and flags. And what that does is it sets the stage for other traders to come in and look at the chart and say, oh, this looks really bullish. It's holding within this flag. If it breaks out of the flag, then it's a breakout. And, you know, it's a combination. You know, like once people see that this breaks out of here, you know, you have a lot of breakout traders that'll chase it. And that's how the whole flagpole will manifest. But most times, if that thing breaks out, it's going to break out like this in some sort of an ebb and flow. You know, like the 1, 2, 3, 4, 5 pulse up. And so that's why you can kind of, you know, understand where to get in, you know, like wait for those, you know, like when this thing broke out here, if you didn't get in on the, you know, on the break, then you have this consolidation period again. Basically, it creates another little flag right here, you know, create a flag right here. So in a bullish market and a bearish, this will be look the same way on the way down, except it will be just upside down. You'll be looking at, you know, price where it moves like this, basically where it comes down, and then it comes like this, and it will go down again. But in here, you'll have, you know, your little zigzags in price where it'll flag up and stuff like that, and then it will break to the downside. So it's just really understanding that these Elliott waves are going to form in all time frames, and understanding the trend basically and how they're going to be moving. And then mapping them out, looking for your best entries and exits based on how they're flowing. Now you could have gotten in here, like I was saying earlier, on Ethereum or Monero or any of these when they broke their market cycle and just said, oh, bang, this thing broke, let me hold it for whatever, you know, a month or so. And you could, you know, kind of look at the larger time frame, stochastic RSI and market strength to kind of get an idea of that. But most people are playing these waves. You know, most traders are actually looking for something that they can identify with that will bring them into the trade. And that's what happens here with a lot of these patterns. Okay, like as this thing comes up like this, I mean, right in here, this is another smaller version right here. This is another smaller pennant. Like when the market was right here, it basically pennanted up right here into a pennant where once it broke, people chased it. Here, it created a flag. Right in here. Again, creates a flag. Right there. Bang. Bang. Once it broke out of that flag, it continued on. So it's the same kind of repetitive market structure that we're looking for. And just understanding where you don't want to get in and where you do want to get in is basically half of the game. You know what I mean? Like you just really don't want to be entering the market at the wrong time. You want to understand that there's an impulsive cycle. You know, like right here would have been the impulsive cycle of that leg. And then this is the impulsive cycle of the entire leg right here. All right, this is the time to be buying or looking to buy the dips. After you get your all 5 waves up, then, you know, you understand that there's some sort of a consolidation that's going to happen from the whole move, and then you just sit back and watch and wait. You know, like the way that I would have played this move, and I did play this move, is, you know, we got in relatively like around here. And then once it got up around here, we're selling and understanding, okay, you know, we're going to sell, but there's a bigger picture unfolding, but we're going to sell and take profit here in this area, and then look for some sort of a way to get back in on the retracement. Now, whether you bought this dip down in here or not, you know, it depends on if you were looking for that. But most of the time, you're just kind of looking for the market to stop doing its retracing and start creating some sort of an area for the price to continue. All right, and then once you see, oh, it broke out again here, okay, time to enter the market again here on the breakout, and we understand that it's going to be making 5 impulses up, okay? And we can even watch that. I mean, you can watch it in 15-minute, hourly, however you really want to play it, but these moves, all right, are going to play out and be, basically, they're going to ebb and flow, and you're going to understand, okay, you got an impulsive move here, right here. It basically held just about this retracement here, and then it flatlined, almost flagged up again, and it broke out again to here. And then we had a nice breather, sold down here, and then did a nice little run. Now, these little zigzags in between, you'll see those on the third wave, sometimes the fifth wave, but we have to understand we want to respect the Elliott wave principle, which is like where that first wave is kind of like the breakout wave. And then we get a retracement of that. That could be like a flat retracement, a deep retracement, however the market wants to react to it. But that's usually, you know, that number 2 point that you want to get in. If it gets flat like this one did, it usually is telling you that there's like, you know, some accumulation going on there for a bigger move. And what happens usually is when that second wave is flat, that next wave that expands will be sharper. Okay, it will be sharper, it will come down more. And then we're going to get another one after that. Now, we could have zigzags in here, and we could have zigzags in here. But the whole overall structure that we're trying to get out of this is the same Elliott wave principle. Okay, we understand that we're going to have mini waves up. They're going to lead to one leg up. That retracement, the little mini retracement, is just going to be a number 2. And then we're going to get some mini waves up again that are going to give us a bigger leg. Okay. You know, it's definitely easy to get lost in Elliott waves, but when you start practicing them and studying the market geometry, they become easier to spot. It's just kind of like learning a language or something. You know, like you really start to tune into them more. And like that's what I was saying here with Monero. Well, it looks like Monero. I don't know. Just dump down to this line right about here. With Monero, is that when we played this, we understood first, this is how I would map stuff out, guys. First, you're looking for, and you guys are making these like weekly market review videos. Hopefully you guys are picking up some techniques in there because it's meant to show you guys that the technique behind it, you know. We understand that once this line breaks right here, that this downtrend, that this move right here is over. Okay, so this move right here is over when that line broke. All right, so we understand that. And we understand there's a bigger move coming because, you know, this the whole thing right here was a market cycle. And then this was a breakout and then a retracement from that. But this downtrended right here for like 2 months. Just about, yeah, like 69 days. So this was downtrending for a while right here, blah, 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 bang. But once it broke this line, it was free to go again. So we understand that once this green line broke, that there's a larger cycle that's going to unfold for Monero. But we don't really know what that's going to be. Okay, we don't really know what that's going to be. We can get an idea off of the extensions in price from that first move, and that's where we come up with our targets. But when this thing impulses out right here, we don't really know how far it's going to go right away. We just kind of know that that impulse is going to happen in some sort of an Elliott wave fashion. All right. So that's why we played the waves that we could see, the waves that showed themselves. Okay, which are going to be those first sub-minute waves. Okay, the first ones that are going to show themselves are going to be these little ones. Okay, this little 1 and this little 2, or this little I, and they have little Roman numerals on them, small little Roman numerals. But that little impulsive wave, that's the first little thing that we see, which would be here. This little impulsive wave here. Okay, and we can play that. Now, I didn't buy the number 2 point because there wasn't as much volume around then, and I don't really like to buy things unless they break out of their resistance zones. And this line right here, this was the resistive zone, this red line. Okay, it's basically like, this is the whole 2-month-long downtrend line. Once it broke that, though, and you can see, it's the same story of turning resistance into support. Okay, like we had volume come in here and break that downtrend line, and then that retracement of that downtrend line basically came and clarified that that line is no longer resistance, it's now support, and then it rallied up and away from there. So we're expecting some sort of sub-minute waves like this to come, but we don't know what they're going to lead into. We do understand that it's a new market cycle that's initiating, and most likely we're looking at getting in on a small little retracement like this for a larger move. Okay, now that's exactly what we did here with Monero. We got in here understanding there's a larger move to come, but of course, it didn't paint itself on the chart yet, so you couldn't really understand what that move was. Now we see more so what that move was. Okay, it was the typical L8 wave formation. Okay, where we had that right there, but all that was just a pull of a 1 and a 2, meaning that this entire move here was a 1 and a 2, and then this was a 3, and then this 4 came crashing down and tagged the top of this wave height. Okay, in the open and close price, it really only came to here, but this is where you can kind of play the L8 wave strategy and understand that if you had an impulsive move up like this, and this wave was pretty flat, meaning this wave here held a 38% retracement, made a bull flag right here. So this is a really flat correction, okay? Well, what happens in L8 waves is if you have one flat correction, the other one's usually sharp. So using the L8 wave strategy here, it opened a window here to score some low buys right here on this yellow line, because when this sold down so sharply, understanding L8 wave theory, you understand that it should bounce on the top of that wave 1. Okay, it should respect that top of the wave 1. And it did, especially when you start looking at the open and close price. And we'll get into reading candles in the open and close price, but basically the way that I play that strategy is that if I understand that this yellow line is the top of wave 1, then when I'm looking to get in on this wave 4, I would literally buy anything close to that line on the way down. All right, anything close to that line. So if you understand, and maybe even like there, like that would be my buy zone. Because you understand that, when you have these L8 waves forming, this next one is going to come down. Now, this is the way it looks on the open and close, right about here, and then it continued up into this. And then we get a consolidation out of it. But you're going to have lots of expansions in price, and you're going to be, lots of fear and shakeout and stuff. So any buys right in here were, a score, because that's what happens in a market is that people chase it here. They don't understand here. They maybe sell. Then on the breakout, they buy the breakout. And once it gets here and breaks this yellow line, then you have all the breakout traders that'll come in and say, oh, this broke a, made a new high, or sometimes this will paint a cup and a handle, and they'll trade that pattern, and then they'll get in right here on this break, bang. But they won't take profit. They won't understand where they are in the wave count, and then the next wave comes right back down and wipes out everyone that chased it. So right there is perfect. You're buying everyone's fear, everyone's loss, everyone, 90. That's just how people lose. Like, to understand my strategy, it really, really is focused on understanding how other people are losing in the market, because the small opportunities to gain in this market are by understanding the smaller opportunities to gain. You wind up having a lot of opportunities to gain when you understand this, because most people are losing. But You have to really study the market and realize, okay, if this L8 wave is going to come up here, it's going to remain flat. I'm expecting a nice third sharp leg up here, and that fourth wave that comes down very well might challenge the top of this. But we're expecting that because we're practicing L8 wave theory and that strategy of the market cycle. Most people that sell down right here are panicking because they bought all in here and thought that this flag was really strong, and they buy in there, and then just price comes crashing right back down on them. So that is loss. That is lots of loss in the market right there, and that's our opportunity to gain by taking other people's loss and turning it into an opportunity to gain from it. Okay, same thing here. This is basically a smaller version of that. Okay, this is a 1, a 2, 3, and when I saw this 4 coming back down like this and tagging this wave 1 top, I said, okay, buy Monero at 125. Because of that, same thing. Buying people's loss, buying the fact. Now these moves are getting smaller looking as we get higher in price, but these were big moves. Okay, when we were looking at the chart happening like this, these look like big moves. You know, like this thing bounces out here, goes 25%, then it retraces about, I think it was about 50%. Yeah, about 50% there. Nice retracement to get in on that right there. And then bang, again, see, look, 1, 2, 3, 4, 5, it comes up. This wave here comes all the way down and tags the top of that wave right there. Open and close though, respect of those waves, okay? Respect of those waves. But people don't understand the way that the market is unfolding. And so they'll say, oh shit, and and they'll sell here and they'll sell it all the way down. And basically what that's doing is, anyone who buys the breakout, okay, you have to understand, most people don't understand the geometry of the market and the structure that the market is painting. And it's very uniform. I mean, I'm sure you guys are already noticing in my signals that I'm sending, in my little videos that I'm making, and with these educational videos, this shit is pretty predictable. I mean, you just have to not trade from the emotional standpoint that most other people are trading from. And the number one thing that's going to kill you is that FOMO, that fear of missing out. And I even still have guys on the signal list that do it. I'll say, get in here at 125, and maybe they don't get in here. When it gets up here and they'll say, oh, he was right. I should buy Monero now. But that's not, you don't want to have that fear of missing out because you're going to enter the market at the wrong time. Okay. So understanding this, we understand here that anybody that bought this breakout, anybody that watched this right here happen and didn't buy this retracement and basically said right here, oh, Monero broke out, and they buy right here, that next wave, bang, they're done. They're wiped right out. And they don't understand that the wave count, they don't understand the structure of the market, and they get wiped out. So it's just the same relative move, okay? I make money on these moves over and over and over again. I mean, this shit just keeps playing itself out over and over again. And that's what I want to show you guys, because this is not the hardest strategy. You just have to really not trade from that emotional point of view, like where you see the price going up and you're like, oh, the price is going up. I need to get into that. And you have that whole fear of missing out mind state. Don't even subscribe to that. Just like throw that away and just kind of watch the market and say, okay, like let the market do what it's going to do and then get the retracement. Like there's a lot of markets we could look at that basically have created a move like this, and everybody keeps chasing them. Now, mind you, that this could happen here, where it's happens relatively fast and it bounces like this, or you have something like Steam. Okay, like Steam is basically in that type of a situation, but on a larger time frame. Okay, larger time frame. Where did it go? Hold on a second. This looks so different to me. Here it goes. Okay. But on a different time frame. Okay, we have a 1 and a 2 here. But it's taking longer for this third wave to manifest itself and continue on because it's a larger time frame. Okay, that's we're looking at the same kind of a story, but just a larger time frame. We have a 1 and a 2, and we're starting to get our legs together here for a 3. But there's also other factors with steam and stuff, you know, with the daily resistance it needs to work itself through and stuff like that. But we're seeing the same thing, you know, like we're looking for these opportunities to let the market just do what it's going to do and look to get in on that retracement, look to get in that area right around where it is now, you know, basically. And I was saying on steam under 18 is basically still in my buy zone here because it hasn't worked through its daily resistance to get the legs and the strength to push on. But it's the same strategy. You know, we want to play, we want to not chase the market, let it do what it's going to do, and get that retracement point, and then just get a seat for that next ride. And a lot of this, you know, does require patience. You know, I mean, we can, like a move like this requires patience because we're seeing it happen here on the 12-hour. So it's going to take probably a couple days to work itself through here until it happens again. I mean, the same thing with Zcash. You know, Zcash is basically doing that same type of thing here, where we have, you know, on a larger time frame here, a bigger move that was made from this breakout right here, this volume right here. And now we're basically like in this retracement zone, like basically where we hit the 77, 88% marks right in here. And it's going to continue on, but it has to work its way through this time frame. You know what I mean? Like, so we could see these. That's what I'm saying. You got to recognize these market cycles in all time frames and understand where they're leading. Like for instance, with Zcash, this would be the beginning of a larger move. Okay, like this would be like even maybe say from here. This is a larger move that's unfolding, but it's going to take hours. You know, these are 12-hour candles. It's going to take a while to come around like this. But when we look at something like Monero, we were looking at, Bitcoin looks pretty strong rallying away from this cloud here, guys. It looks pretty good. But I wouldn't chase it. I would just wait for it to do what it's going to do, then sell down and everybody kind of gets shook and then we look. But that's the kind of thing. We're looking for clarification that we're not going down anymore. So this is like, for me now, I would say that we are not really going to go down anymore. Okay, like we basically went down here, we hit here, we went down here, we hit here, we went down again, and we tagged this line as resistance, fell down, but we found support right in here to push us through. So if we stay above this hourly cloud, and now we're above this red line, yeah, it's looking pretty good for the bigger picture to kind of turn around for us. So, but those are the kind of things like, you know, you want to really establish which way you're going here. You know, like this thing also created a pretty nice, no, this isn't the prettiest Elliott. I don't really like that this third wave is short like this. But, you know, the market is always wants to do what it wants to do. That is still a clean, impulsive move down, you know, and this is a relative, some sort of a ABC correction here, where we have like this, and then it comes down a little bit, and then it continues on, you know, same thing. You know, it's just a upside down Elliott, guys. It's just an upside down Elliott. All right. Same thing. So, and how we play those, we'll talk about how to more strategically play those, you know, based on the Fibonacci, like this, like bang. So this one, you know, we could tell that this thing was riding down and only really retracing back up about 50%. So, you know, this was, you know, the kind of a move. We want to measure this whole move. We got our 5 waves down. We got our ABC up. This thing's only doing about 50% here. This was the point, you know, last week. If it could have cleared this cloud and continued on, it would have done its typical reversal move, but it couldn't. It failed right there. So it was like that 50%. It basically created this with a 50% retracement of the whole move back up, and then it had to sell down a little bit more. So it's really just identifying these this market structure over and over again. Okay. Now you can see here these now since we're downtrending here, we're below this line. It's like when we're trending up, like in Monero or something. Got a nice trend up, okay, and we're seeing these Elliots that are riding on the trend, kind of like this, okay, where we have like a trend. This blue line is like the trend here, and we're getting that 1, 2, 3, 4, 5 off of that. But once this snaps, like I was saying to you guys, I think in the last video, once this snaps, that trend is over, okay, and then we're starting to get into our correction phase. Okay, so if we're in a bull market, we're buying the market and we're like expecting to get, a return out of it. We have to understand our wave count, and we maybe we get in here on the break, get in early, or maybe if not, we get in here on the number 2 point. If not, we get in here on the number 4 point. But we want to buy. When the market's going up, we don't want to buy it when it's going up unless we can get that breakout. We really want to buy the market when it's selling down to its retracement points, because that's when everybody else is getting shook out and they're unsure in their trade and they don't understand the structure of the market, and we're basically, their loss is our gain in a sense. So, but once we understand, we have to understand the wave count. If you get in a number 2 point, you have to understand, okay, that number 4 may challenge you for a minute, but then it will continue. If you get in a number 4 point, you have to understand, okay, there's not that much left in this wave. Let me take my profit when it seems like it's, coming to the end. And you can also consult this trend that these things ride on and say, okay, once it snaps this trend, time for me to get out. It's going to do some sort of a correction. And we can see that very, very clearly on things. I mean, let's see, a good example recently would be Dash. Okay. Here's a good example recently. Now, Dash may very well just create a flag here and continue on because the monthly is so strong. But you can see here that this thing basically ran on this trend line until it couldn't handle it anymore. Okay. Ran on that trend line. And what did it do here? This trend line? It created nice impulsive moves. 1, 2, 3, 4, 5. And then we basically cracked the support line. All right, 1, 2, 3, 4, 5, and then we crack the support line. So it's just all, and then once we crack the support line, what do? We get into the corrective side. Okay, the corrective side of the market. And this is just all repetitive stuff over and over again. Okay, like I mean, you guys have been following me for a while. You guys know that we got in here on this retracement. I mean, we played this thing back in here, no idea that it was going to break out like it did. But it goes to show you that one trade will just kind of lead to another, all right? Because when we played this back in here, I played this because I saw that this thing had broken out from basically this zone here, okay? Which is really just a flag when you look at it. Okay, this was a flag, another type of a bull flag situation where we have, a flag. Now, mind you, I'm looking at the hourly, so I can only scrunch it so much. But, this was a larger, let me even look at it like the 6 hour here. It's like a larger move. All right. Come on. There we go. It's like a larger move. This is basically just a flag. Okay. Now, when it did that, when we played it, we were expecting the length of the flagpole. Okay. And right here, we were expecting this to run up, most likely to here or so. And how did that happen? In Elliott wave fashion. Okay. Same structure. Except here was a little bit sloppier on this wave. Okay. But this is how we played. This is how we played this. If you guys remember that were with me then when we played this on this breakout. We got a nice, oops, wrong Elliott. We got a nice 1, 2, 3. Now this 4 did come back down and really interfere with this, but it turned around pretty quick. And the only reason that this sold down so much right here is because that's when Bitcoin started pumping that day. So we're seeing a little bit more fluctuation in the waves a little bit because these things are paired against Bitcoin. So when Bitcoin wants to do a huge move, people will dump out of these coins that are paired against Bitcoin, but that doesn't wreck their trend. These things are trending up, they're going to trend up. But since it's paired against Bitcoin, people sold this down further than I was expecting it to go. I was expecting it to go here about 190, and it went to like 170. So, but it did turn around, and it gave us this wave. Okay. But then it did not give me the ABC correction. It's the same thing. Like, as you map these things out, you start to get little hints of what might happen here. Okay, like this is where I was expecting an A, a B, and then a C down. Maybe back down even to the top of this box, or at least to this cloud. But we didn't get it. it basically denied that ABC retracement and bang, broke out further. So, which is the same thing that Bitcoin did. Okay, Bitcoin basically denied my larger ABC retracement, and see, look, we're getting a nice breakout now. So let's look here at Bitcoin. Now here, let me get all this stuff off of here. Okay, look, Bitcoin's getting a little, looks like we're getting on our 3-day, a nice little green candle here, possible crossover of our stochastic RSI strength. This is looking like we possibly may have seen the last of the 3 digits, okay? So what happened here with Bitcoin is I've been playing this thing all year, okay? Like, I mean, maybe you guys have seen it or not, but I have a chart I made basically right here. Right here, I made a chart that said Bitcoin to 3,000 within the next 2 years. And I made that chart in 2015, understanding that once we broke this market cycle, we're creating a new one. Now, this one's taken, a while to grind its way up. But what I had noticed is that I had a wave count of about this, more or less like this, okay, over the whole course of the year. Now, that was my wave count that was working for me. It was working fine. It was doing good, all right? And that's, your wave count will work until it just doesn't work anymore, and the market wants to continue in one direction. Now, I was expecting this, an A, B, C down to here, to about 6 something, and then a continuation for our larger, emotional state to continue, emotional cycle to continue. But right here, let me look at on the day. Actually, let's look at the 12-hour. Right here, I was expecting an ABC retracement of this entire move, some sort of a breather here, okay? But right here, it denied that, basically. Okay, it did not come down and give me that leg that I was looking for, which was very bullish for Bitcoin. Considering that point, now I was already looking to sell that point right there at the 786 because I was expecting some sort of a move like this. Bang, and then for us to continue down. Now this is where Bitcoin clarified itself and said, no, the trend is continuing. And you have to, switch your analysis based on what the market's telling you. Okay, like we sold right here. I sold right here. Basically, and it just so happens to be, I was already getting into a sell position here at the 78.6, and that's where the China news came out and said, oh, China's going to suspend all the withdrawals and deposits for a month. But that China news was not even bad enough to give us the ABC correction that I was looking for. I was expecting that China news to really accelerate and be the catalyst to give us that ABC retracement, and it didn't. It basically respected the daily cloud, and we'll talk about the cloud, but the cloud is a wonderful thing. It respected that daily point right there, and then rallied on out. So once the market showed itself right there, and we were denied that ABC retracement, it was time to look at the market in a different way again. And then what happened? The market creates a typical cup and handle for all of the retail traders to come in and manifest. Oh, sorry. Sorry, guys. That's not the cup and handle I wanted to draw. Basically, it comes in like this, and then creates that cup and the handle. And then once that line broke, it was the sign for a lot of people to get into it, okay, to get into it again. And these are the kind of things that we're looking for. We want to play our Elliott wave strategy until it just doesn't flow anymore. And then when it doesn't flow, it shows us, oh, okay, wait a minute. This is possibly not going to give us the, it's kind of like this. Like if you're expecting a certain move to happen in the market and then it defies it, then that's your sign to say, oh, okay, I've been mapping this thing out. I'm not getting the correction that I was expecting here. Let me start looking at the other side of the trade. The same thing with Dash, like we just pointed out. Once it defied that retracement, Then you have to say, okay, whoa, this thing's going to go further. This thing is going to go further. Wow. Wow, 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 wow. Hey, I don't know. Faded out there for a second. But yeah, the market is always repeating itself in geometrical patterns over and over again, guys. Over and over again. So tuning into this Elliott wave cycle that keeps repeating itself over and over is really the only way that you're going to continue to, I mean, you can buy breakouts, you can buy patterns, but really tune into how those are being shaped with Elliott waves, okay? Because this is the kind of thing that repeats itself over and over again. This market structure can be found in any time frame. It really can. And until I noticed it and put it together with the psychological market structure, I lost. Since I've been practicing this strategy, I've been on a huge winning streak for the last couple of years, where I'm about 80% right. I mean, recently I've been about 90% right, but about 80% on the usual. But this is what we're looking for, guys. Like when the market, the biggest thing is clarifying the trend. Okay, what direction is this thing going in? Where is our market cycle taking us? Once we know that, the trend is your friend. Play the Elliott waves based on that trend. Wow. Yeah, play your Elliott waves based on that trend. Okay, when you see that the market is downtrending a little bit, like Bitcoin was doing a little bit over here, play that same strategy. Okay, play that same strategy up and play it down. Okay, because once you get these impulsive moves, your 2 and your 4 points are going to be your entries, whether it's up or whether it's down. So, well, that's it today, guys. Sorry about that computer cutting out on me and also the internet here. I'm going to get a new computer today. I can't be letting my kids touch the screen on this one. But yeah, hopefully you guys got something out of it. I'm going to send everybody a recording, and on Wednesday we'll continue on our sessions on Wednesday. As far as where we're at here, just be careful to remember on the larger time frame, Bitcoin still has to clear some points here before it really starts to get on a tear. But it does kind of look like we are leaving behind the 3 digits, and we're kind of clarifying that, the market is accepting that 4-digit psychology. But that's the kind of thing that needs to happen, guys. You know, we need to get down there and kind of get that, you know, that selling down to be able to pop back up and get optimistic and then belief for all the, you know, the thrill and euphoria to come. I really don't think that's going to affect the altcoins other than just kind of like a sell down to play Bitcoin, and then they'll pop back up. But looks like RADs here got dumped down. Yeah, that was expected. It's not going to look where it got dumped down to, guys. Look. Top of wave one. Look. 1, 2, 3. This thing just got dumped right back down to the top of wave one. Looks like we might be getting a crossover on our hourly. This thing will probably be a pretty good entry around here for another move up. All right. Same story. Same story. So I'll catch you guys on Wednesday. I'm going to send everybody a video copy of this. I guess it'll be 2 video copies since we got cut out in the middle. But again, I apologize for the computer messing up on me there, guys. And also, you know, my connection, I got like 4Gs here, but I do live in Costa Rica, and sometimes it will fade for a second and come back. So I apologize, and yeah, I'll catch you guys on Wednesday. Keep stacking the Bitcoin until then. Take care.